Good morning, traders. Manny Cabrera from NDC Trading Academy of our pre-market forecast for today, Wednesday, March the 27th. Let's jump into our news items for the day. Today being Wednesday. I got it on the screen. Sorry, guys. Wednesday here, we don't have anything to worry about today. This is just a member of the FOMC or the Federal Reserve Bank that's speaking. We don't really stop our trading for that. Let's quickly jump to our analysis. We jump to our daily chart. Market coming off once it broke the resistance area, like we were saying, finding resistance here at the 20 SMA. This is a very common pattern that we see in the market continuously. We see the market come down, create here a flag. Market breaks through. A lot of indecision yesterday. Notice we broke out a doji right now. We're a little negative right now. But this is the moment of decision again. Remember, I talked to you about this before. I said to you, if we break through, we come back, find support at the 20, we're going to come retest this triple top again. This is just the way the markets work. It's just common sense. Areas are there to be tested, retested, broken, established, so on and so forth. That's the pattern of the market. Never moves up straight down or straight up. It moves up in waves. Up, retraces, runs, retraces, runs, retraces. Here you have it. Run, retrace, run, retrace, run, retrace, run, retrace. That's the way the markets move. So these moves should not surprise us. As day traders, short-term traders, we're just looking for conviction in a move. It doesn't matter whether it's up. It doesn't matter whether it's down. All we need to see is conviction. What we've had the last couple of days, the market has been a little bit mixed. It starts really mixed in the morning, then it starts picking direction in the afternoon. But we have mixed markets, so it's been a tough market to trade. I'm not gonna make it sound like it's been an easy market. These markets tend to be a little bit more challenging. But nonetheless, if you keep your eye on the right things, the market can pretty much tell you what you can expect. Let's quickly jump to our projection chart. Again, this chart is not a chart we make decisions from. This is a chart that we just kind of plot out potential price areas where we're expecting markets to move. And here we see once again this triangle here. Remember, I threw this triangle for weeks now, and I told you where the key support and resistance areas in this movement are. And here's the resistance being tested. Market retraces from it. We haven't recovered yet. Here the market is continuing to downslide. We found the bottom here, one of our support areas that we have previously established. Now the market is finding another wind up again. Runs up, finds support. Now it's trying to attempt. Now we have a little bit of a wedge here where we can see the market's kind of in between these two areas. So again, markets they're never going to continue to move sideways. They're eternally, they have to have their runs. They have to have their retracements. We're expecting markets to run and eventually break one way or the other. Like I said, we have a doji, which means indecisions. There's a lot of economic information to be released this week. I think the market is waiting for a little bit of that information, but that's what we're expecting today. We can look closely at that with our analysis chart, and you see we have a market that's in between areas. We have the intraday high, which is the blue. The pink is the intraday low. If you notice, the market is between these areas opening today. It has been opening more or less between these areas practically the whole week so far. Why? It's called indecision. So what are we looking for here? We're looking for a clear structure of a market that we can take advantage of. And here's where we draw a trend line to the upside. We still don't have a specific trend line here, but it looks like it can be forming. But the market is trying to find its legs. That's what's going on here. It's trying to find its legs. It wants to make the runs. It wants to make the quick run to the downside. It wants to make a run to the upside. And what you notice here is that the moves down so far in the pre-markets tend to be stronger than the moves up. That's a piece of information you need to take with you to the bank. You see what I'm saying to you? You have your few pops up, but mainly you have a lot of pops quickly down. Okay, what does that tell you? That although the market does have the ability to move to the upside, it has the desire to move to the upside, it's not going to be easy because we have a lot of selling pressure. Why? Because the market is very evenly distributed between these two areas. That's why you see these kinds of movements. Let's go quickly to our trade chart. And you can see here again, we're finding ourselves between areas, finding support here. Here it is. See, the ranges are very tight here. We're at 2008, let's see, let me just be sure here. 0825 to, let's see, 34, that would be 6 points, almost a little over 6 points. So they're very tight, and our spaces between mid-band and our outer band here, 1950, we're about 4 points, about 3 points, 3 or 4 points here. So we do have movement. You just have to be very careful. We have a lot of overruns. These are not easy markets to trade. Don't fool yourself. They're not very easy. These are mixed markets. within areas that have very tight ranges and very, very, very little structure. So just keep your eyes open for the hitting key support areas, key resistance areas, and try to take the trades from the extreme. Thank you so much for watching. We appreciate it. Please send your comments to info at MDC Trading Academy. And thank you for hitting likes, and please share.